This week we're going to highlight the latest crop condition ratings from the USDA, as well as look at crop progress. We're also going to take a look at short-term weather trends as harvest gets underway, and wrap things up with some ongoing concerns about weak export demand. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We moved into the latter half of September here, and of course that means harvest is just about to get underway. Let's start out this week, however, looking at the latest crop condition ratings from the USDA. Now, with harvest about to begin, crop condition ratings don't carry the weight that they do during the summer, but we think it's still important to look at the trend in terms of the week-to-week changes. This week, the actually good to excellent was unchanged compared to the previous week. Notice a year ago, however, we were at 55% compared to 52% this year. Kind of a mixed bag, a little bit of improvement across the western belt, Minnesota, Iowa, North Dakota, Nebraska, South Dakota, Nebraska, but some deterioration across Illinois and the eastern corn belt. Let's now look at our aggregate crop condition index for beans. It made another new low for the year here this week, looking at a level that's not only well below last year, but considerably below some of these recent years. So this will be an interesting year to see how crop condition ratings relate to yields. Let's now turn our attention to U.S. soybeans harvested. We're looking at the USDA reporting 5% nationwide completion as of Sunday the 17th. On average, over the next 2 weeks, U.S. soybeans harvested increase approximately 18%. So by the 1st of October, we should be in that 20 to 25% range, weather permitting. Speaking of weather, let's take a look at the short-term trends. Our slides this week, as usual, are courtesy of T-Storm Weather. We're starting out this week, looking at a change in the pattern this week. All that green area highlight here is going to be some rainfall here Thursday through Sunday, 1 to 2 inches, so that's going to slow down things. Let's quantify that a bit further. Let's look in the background here of U.S. soybean production. You can see quite a bit of the U.S. soybean crop, of course, west of the Mississippi River, Minnesota, Iowa, North Dakota, South Dakota, Nebraska is going to be wet, so not much progress if that forecast rings true. Let's quantify that one step further here, looking at the totals, all that area in yellow and red, looking at 1 to 2 inches here over the next 7 days. As we move further east, however, not as wet in the eastern corn belt. If those beans are ready, we may have more harvest opportunities there. Let's now quantify things over the next 2 weeks. Now we're looking here at, again, a picture that shows some dryness across Kansas, some of that western area. But as you move further north, northern plains is going to be very wet, so not much activity expected over there. Across the heart of the Midwest, more normal totals here across Illinois, and the eastern corn belt will be dry. If those beans are ready, we could see some harvest activity in that region. Let's now shift our focus to demand with the start of the new crop year. Let's take a look at unshipped soybean export sales. We're looking here at some weakness in terms of relative to the last 3 years in terms of bean export book. Just about 600 million bushels on the books here, but specifically we want to highlight one area, and that's China. Unshipped book to China is down 49% compared to last year, and it's 48% below the 3-year average. So we are seeing bits and pieces of Chinese demand come in here, but quite a bit of that demand appears to be being met from that record crop in Brazil. Let's wrap things up this week looking at long-term trends in November soybean futures. Now, November beans, as we tape here on Tuesday, are trading near $13.15 a bushel. Now, although that's well below last year, it's considerably above some of these recent years, so we strongly encourage you to work closely with your trusted risk management advisor to continue to defend your balance sheet. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel to never miss an upload. Thanks a lot. Have a good week.